Welcome back, scholars. Let's dive right into what is, quite frankly, one of the most notoriously tricky areas of the entire Cambridge A-Level Accounting 9706 syllabus. We're talking about limited company financial statements, and specifically, we are dissecting what I like to call the treacherous triad: debentures, dividends, and reserves. Now look, based on actual principal examiner reports, candidates are consistently losing easy foundational marks on this topic year after year. It's incredibly frustrating because this is often the exact difference between securing an A-star and sliding down to a B, and it's almost always due to a failure to apply theoretical principles to unfamiliar contexts. But we're going to fix that today. In this explainer, we're going to completely deconstruct complex questions, we're going to master your time allocation, deploy some serious critical thinking strategies, and look exactly at what the examiners are hunting for when they mark your papers. So get ready to take some notes.
Right off the bat, I want you to listen to this direct quote pulled straight from the principal examiner's desk. It says, "Candidates consistently confuse key terminology. Always define terms before using them in extended responses." Let me be crystal clear. This isn't just a polite suggestion from Cambridge. It is an absolute mandate if you want those top-tier marks. Think of it like this. The theoretical architecture of limited company financial statements rests entirely on precise definitions and very clear causal relationships. If you start analyzing the impact of a debenture without first clearly establishing that a debenture is a long-term, non-current liability carrying a fixed rate of interest, you are literally building a house on sand. It's going to collapse. Examiners are constantly warning us that jumping straight into a complex evaluation without securing your foundational knowledge and understanding marks, what we call your AO1 marks, is a fatal flaw. You absolutely have to lay the groundwork before you can build the argument.
Okay, so here is our strategic roadmap for this session. First, command word anatomy. Second, we'll look at a peer deconstruction debate. Third, we're tackling the roadblock and method marks. Fourth, an interactive pause and practice visual workshop. And finally, a complete strategy recap. Let's move fast and go deep.
Section 1, Command Word Anatomy. Deconstructing the prompt. Let's get into it.
Imagine you're sitting in the exam hall. The clock is ticking, and you see a massive 15-mark high-tariff question that looks something like this. The directors of Alpha plc are considering financing a $500,000 expansion by either issuing 8% debentures or utilizing the general reserve. Evaluate the impact of both options on the company's financial statements and its shareholders. Now, a very common trap here is treating the word analyze and the word evaluate as the exact same thing. Let me tell you right now, they are not. The Cambridge Assessment Framework rigorously prioritizes analytical depth over superficial breadth, but it demands evaluation for the absolute highest marks. If the command word is just analyze, your job is pretty straightforward. Break the information down into logical steps. For Alpha plc, analyzing simply means calculating that an 8% debenture on $500,000 creates a fixed annual finance cost of $40,000. It means stating that this will decrease profit for the year and increase non-current liabilities. Simple, right? But if the command word is evaluate, which requires those crucial Assessment Objective 3 or AO3 marks, you must make justified recommendations and compare alternatives. You have to step up and say, while the debenture increases gearing and financial risk, utilizing the general reserve avoids those finance costs, but depletes retained earnings, and that depletion could reduce future dividend payouts and frustrate shareholders. You have to conclude by saying something like, therefore, if the current economic climate is volatile, avoiding fixed debenture interest is recommended. See the difference? Evaluation demands a judgment, it demands you pick a side and defend it.
Let's look at another classic comparison. Explain versus to what extent. If an examiner asks you to explain why dividends are paid from revenue reserves rather than capital reserves, they want you to demonstrate causality. So you would explain that revenue reserves, like retained earnings, represent realized profits that are actually available for distribution, whereas capital reserves, like a share premium account, are unrealized or legally restricted. You're just explaining the why. But what if the prompt asks, to what extent does a high dividend payout ratio benefit shareholders? Now you are dealing with hidden constraints. You cannot just list facts. You have to argue both sides of the coin. Yes, it provides immediate liquid returns to the investors, but to a significant extent, it starves the company of internal financing for future growth, which could potentially harm long-term share value. You must weigh those arguments against each other.
Moving on to Section 2, Peer Deconstruction Debate. This is all about how you structure your layout.
To really understand this, I want you to imagine two different types of students in a digital study suite right now. Let's call our first scholar Alex and our second scholar Sam. Alex is highly technical. He excels at formulas and facts, but struggles with open-ended evaluation. Sam is the total opposite, a creative thinker who's great at making big arguments but struggles with structural precision. When tackling assessment objectives, a common mistake is leaning entirely into Alex's factual approach. That means spending 3 whole paragraphs just defining debentures as a debt instrument, defining the general reserve as a revenue reserve, and listing out the formula for gearing. While securing those AO1 knowledge marks is definitely important, the bulk of a 15-mark question lies in the AO3 evaluation marks. You won't get there just by listing facts. Conversely, if you act like Sam and jump straight into a broad conceptual perspective, arguing whether debt or equity is better for long-term shareholder wealth without any foundational definitions, you are equally in trouble. Your essay will float away without an anchor. Both extremes walk directly into the examiner's trap.
So how do we fix this? To move from a purely descriptive tier to a highly analytical, evaluative one, you need a synthesis of both Alex and Sam's approaches. If an essay is purely descriptive, the examiner is just going to tick off a few knowledge marks and then stop reading because there is no actual application to the specific situation. But aiming for the evaluative tier without a solid foundation of definitions makes your arguments read like unsupported opinions rather than an academic accounting analysis. As the principal examiner reports continually highlight, candidates who reference cross-topic connections achieve significantly higher marks. You need the technical precision of Alex, like calculating the exact impact on liquidity and the statement of financial position, paired perfectly with Sam's big-picture thinking. You achieve this by using comparative connectives, words like conversely, furthermore, and ultimately, to tie the math to the theory and draw supported conclusions.
Okay, Section 3, the roadblock and method mark strategy. But hey, before we dive into how to overcome the single biggest roadblock students face in this topic, I want to quickly pause our session. If you are serious about mastering these Cambridge strategies and actually getting that A-star, make sure you hit the subscribe button for Ace the Exam's IGCSE and A levels at the handle acetheexam_IGCSE. Turn on all those notifications so you never miss a weekly Cambridge breakthrough strategy like this one. All right, let's get back to getting unstuck.
Let's look at a commonly drafted yet totally flawed model response paragraph. Imagine Alex and Sam compromised and wrote this: the company issued debentures and paid dividends from reserves, which impacted liquidity. This right here is a perfect example of what examiners absolutely hate. This draft has hit a major roadblock. It's vague, it lacks appropriate accounting terminology, and it demonstrates zero professional skill in data interpretation. Let's break down why it's so bad. The company issued debentures. Okay, which ones? What percentage? And paid dividends from reserves. All right, which reserves? Capital or revenue? General reserve or retained earnings? Which impacted liquidity? Impacted how? Did it increase it? Did it decrease it? You can't just say impacted, you have to be specific.
When you find yourself writing vague sentences like that, you need to get unstuck fast. And to do that, you use the cognitive method mark strategy. Remember, Cambridge accounting isn't just about getting the final number right. Marks are heavily awarded for the process itself. You need to follow this exact 6-step sequence. Step 1. Deconstruct the question. What is the specific context of the company? Step 2. Extract the relevant data from the stimulus materials. Don't just generically say debentures. Say the $150,000 10% debentures. Step 3. Select your analytical framework. Are we talking about profitability, liquidity, or gearing? Pick one and focus. Step 4. Execute with clear working. Show your math on the page. Even if your final calculation gets messed up, showing the working secures the method mark. Step 5. Verify your results for reasonableness. Does this number make logical sense? Step 6. Present your final answer with correct professional terminology.
Now let's see what happens when we apply that specific context. It completely transforms our terrible draft from earlier. Instead of that vague mess, a top-tier response sounds like this. The issuance of the $500,000 8% debentures will decrease immediate liquidity as the fixed annual interest of $40,000 must be paid regardless of profitability. Furthermore, utilizing the general reserve to pay the proposed dividend of $50,000 further depletes cash and cash equivalents. While the debenture provides necessary capital without diluting ownership, the simultaneous outflow for dividends significantly increases the company's short-term financial risk.
Boom! That is a flawless,
Full-mark evaluative response. It uses specific numbers, it applies correct formats, it identifies causal relationships, and it confidently evaluates the overall performance.
All right, Section 4. This is where you come in. It's time for our interactive pause and practice visual workshop. I'm going to put you in the hot seat.
Take a look at this trial balance extract. We have retained earnings sitting at $200,000, an 8% debenture listed at $100,000, debenture interest paid showing at $4,000, and an interim ordinary dividend paid of $10,000. The challenge here is extracting the hidden relationships. You have about 60 seconds in a real exam to figure this out. What is the accrued expense here? And how does this impact the statement of profit or loss versus the statement of financial position? Look closely at the numbers. You need to immediately identify that the total debenture interest for the entire year should be 8% of $100,000, which is $8,000. But look at the trial balance. It only shows $4,000 actually paid. That means you have a $4,000 accrual. That accrued interest must be deducted from profit as a finance cost, and it has to be added to your current liabilities. If you miss that one step, your retained earnings figure will be entirely wrong, and your proposed dividend calculation later on will be completely thrown off. It's a domino effect.
Let's try another scenario. Spot the flaw. A student has quickly written down the following. The revaluation reserve of $50,000 was used to pay the final ordinary dividend. The share premium account was transferred to the income statement. The general reserve was reduced by the debenture interest. I want you to take a really good look at that paragraph. Can you find the 3 critical, conceptual, and formatting errors hidden in those 3 sentences?
Okay, let's break them down. There are 3 exact traps set by examiners here, and again, these are derived straight from the principal examiner reports. Error 1 is the wrong approach for the context. You absolutely cannot use a capital reserve like a revaluation reserve to pay a cash dividend. It's literally against the rules. Dividends must come from revenue reserves, like retained earnings. Error 2 is incorrect format and presentation. The share premium account is a capital reserve. It never ever goes anywhere near the income statement or the statement of profit or loss. It belongs firmly locked in the equity section of the statement of financial position. And error 3 is a complete lack of contextual specificity and fundamental accounting logic. General reserves are an appropriation of profit. They have absolutely nothing to do with debenture interest. Debenture interest is a finance cost that is charged against profit before you even arrive at the profit available for appropriation. Falling for these 3 traps shows the examiner that you don't understand the fundamental architecture of a limited company, and they will penalize you heavily for it.
And finally, Section 5, Strategy Recap and Masterclass Takeaways. We've covered a lot of ground today.
What you should take away from this is that merely listing formulas and defining terms won't secure the top band marks without applying them to the specific company's scenario. And sweeping evaluative statements are completely useless unless they are backed up by structured reasoning, comparative connectives, and precise mathematical evidence. Cross-topic references, like linking a debenture directly to gearing and linking a dividend payout directly to liquidity, are the ultimate keys to unlocking the highest marking bands. So, to make sure you never forget this, we can distill everything into 3 core, highly memorable pillars for your accounting success. If you apply these 3 pillars to every single limited company financial statements question you face, you will dramatically increase your accuracy and your analytical depth.
Pillar number 1 is the 3-step question scan. Before you even pick up your pen, I want you to scan the prompt for the command word, the specific company context, and any hidden constraints. Know exactly what battle you're fighting before you start. Pillar number 2 is the paragraph balance formula. Every analytical paragraph you write must contain 3 things: AO1, which is the rule or definition, AO2, which is the specific calculation or application to the stimulus, and AO3, which is the evaluation of the impact. If even one of those elements is missing, your paragraph is unbalanced and you're leaving marks on the table. Pillar number 3 is the last 5 minutes review checklist. Never hand in your paper without verifying that your formats are correct, your terminology is professional, for example, saying finance costs instead of just interest, and that you have clearly shown all your workings to secure those vital method marks. Crushing your Cambridge A-level accounting exams doesn't just happen by accident, folks. It requires consistent, strategic execution. These examiner reports make it incredibly clear that your foundational knowledge has to be flawlessly paired with cross-topic evaluation. You must consistently practice past papers using the frameworks we discussed today if you want to master the examiner's logic. And remember, if you want more high-level breakdowns like this, hit subscribe to Ace the Exams, IGCSE O&A levels at acetheexam_IGCSE and turn on the notification bell. It's the best way to stay ahead of the curve.
I'll leave you with this final thought. The difference between a purely descriptive student and an evaluative student is simply the courage to make a justified recommendation based on the data in front of them. So, the next time you sit down with a complex accounting prompt, ask yourself, what is your specific strategy to move beyond description and into evaluation? What is your target Cambridge accounting grade? Drop it in a comment below. Declare your goal. Stay focused, trust your structure, and keep analyzing the data. I'll see you in the next masterclass.